Okay, now we have this MCQ number 50, which is on tax calculation of as well as surcharge rate calculation for individual. Mr. Ashutosh, aged 65 years, underline 65, and a resident in India. That means he is a resident senior citizen. The basic exemption limit applicable for him will be rupees 3 lakhs instead of rupees 2 lakh 50,000. He has total income of rupees 3 crore 20 lakh. That means income is more than 2 crore but is up to 5 crore rupees. That means surcharge rate should have been 25%. However, we will see what surcharge rate is ultimately applicable, comprising of long-term capital gain taxable under section 112 of rupees 57 lakhs plus long-term capital gain taxable under section 112A of rupees 65 lakh and other income of rupees 1 crore 98 lakh. Three types of incomes are there. Number one, 57 lakh will be taxable at the rate of flat 20%. Second is long-term capital gain under section 112A 65 lakh. Here, according to section 112A, first 1 lakh rupees will not be taxable, tax will be 0, and on balance 64 lakh rupees the tax rate will be 10%. And other income 1 crore 98 lakhs. Now other income may be taxable as per rates given in section 115 BAC, slab rates given in 115 BAC, new tax regime optional, or as per old tax regime. Let us understand. It says what would be his tax liability for AY 23-24. Assume that Mr. Ashutosh has not opted for the provisions of 115 BAC. That means this 1 crore 98 lakh will be taxable as per slab rate. Three types of incomes are there. Which three incomes are there? Number one, long-term capital gain under section 112. Number two, again long-term capital gain under section 112A, and the third one is other normal income. Amounts are 57 lakhs, 65 lakhs and 198 lakhs. That is 1 crore 98 lakh, totaling to 320 lakh. Total is more than 2 crore but up to 5 crore. So surcharge rate ideally should be 25%. However, we will discuss about surcharge rate at a later stage. Right now let's calculate the tax. Tax under section 112 on at the rate of 20% on 57 lakh into 20% will be 11 lakh 40,000. 11 lakh 40,000. Then under section 112A on 65 lakh, on the first 1 lakh tax will be nil, on balance 64 lakh tax at the rate of 10% will be 6 lakhs 40,000. The total tax under section 112A will be 6 lakhs 40,000, and on balance other income, third and the last income, 1 crore 98 lakh rupees. He is not opting for 115 BAC. Tax will be first 3 lakh basic exemption. He is a resident senior citizen, therefore basic exemption 3 lakh. First 3 lakh nil, next 2 lakh rupees at the rate of 5% will be 10,000, next 5 lakh at the rate of 20% will be 1 lakh, and on balance 1 crore 88 lakh out of 198 lakhs, 10 lakh is gone, first 10 lakh is gone, balance 1 crore 88 lakh will be taxable at a flat rate of 30%, 56 lakhs 40,000. 56 lakhs 40,000 plus 1 lakh plus 10,000 will be 57 lakh 50,000. The total tax will be 57 lakh 50,000 plus 6 lakhs 40,000 plus 11 lakh 40,000. Total tax will be 75 lakh 30,000. Now on the 75 lakh 30,000 of tax on three types of income, we will be adding surcharge. Surcharge will be at what percentage? Now ideally when the income is more than 2 crore but up to 5 crore, surcharge rate should have been 25% as we have written here. However, we have two special incomes, two types of long-term capital gain on which surcharge rate will be little different. There is something called capping of surcharge, means surcharge shall not exceed 15% on four types of income. Let's understand. If you recollect the provisions for surcharge, surcharge rate for individual HUF, AOP, BOI, whether opting for 115 BAC or not, will be 25% of tax provided NTI exceeds 2 crore rupees but is up to 5 crore. In our example, NTI is 3 crore 20 lakh. That is 320 lakh. It falls under this particular category, 25%. However, on this additional surcharge of 25 and 37% which were introduced from AY 2021 by Finance Act 19, these two additional surcharge rates shall not apply for individual HUF, AOP, BOI in following four cases, including one newly introduced from current year. Which four incomes? short-term capital gain referred to in section 111A, long-term capital gain referred to in section 112, long-term capital gain referred to in 112A, and dividend income. Out of these 4 incomes, in the present question we have these two incomes. There was an amendment. There were only 3 incomes where the surcharge would be restricted to 15%. One more income has been added with effect from AY 23-24, and that income is LTCG under section 112. Do we have? Yes, we have. So what will happen is, on tax on these 4 incomes, especially under section 112 and 112A LTCG, the surcharge rate shall not exceed 15%. But how exactly is this to be calculated? So that we had discussed in a separate chapter on surcharge. So what was it? The surcharge we had discussed it in a tabular form, and then we had discussed some summary. So then we had discussed couple of examples. I had taken 30 examples. Okay, so what is the summary? If you summarize everything, summary says there are 2 points, 1 and 2. The surcharge rates for individual HUF, AOP, BOI and artificial juridical persons are divided into 2 categories broadly. If the NTI including 4 special incomes, net taxable income including these 4 special incomes, 2 types of LTCG, dividend and short-term capital gain. That means normal income as well as special income combined together is up to 2 crore. If the net income does not exceed 2 crore rupees, then surcharge will be as usual. Surcharge rate will be normal, 0, 10 and 15%, because the net income does not exceed 2 crore. Then this 15% capping concept does not arise only because the net income itself is up to 2 crore. Problem arises only when the net income including 4 incomes, including 4 special income, is more than 2 crore. As in the given case the net income is 3 crore 20 lakh, 320 lakh. That means it will fall under this category. But here also there are 2 possibilities. Possibility number A, possibility number B. Which is possibility number A? In possibility A, the net income exceeds 2 crore because of these 4 special incomes. What does that mean? That means net income would not have exceeded 2 crore if these special incomes were not there. That means normal income, other normal income is up to 2 crore. Up to 2 crore. Our example, we have 2 types of LTCGs. Which 2 LTCGs are there? We have LTCG under section 112, 57 lakhs, 112A 65 lakh, and other normal income is 198 lakh. Total is 320. Now this is falling under this particular situation where the net income is exceeding 2 crore. Net income is 320 lakh. But net income is exceeding 2 crore because of these 4 special incomes, or any of these 4 special income. If you remove these 2 special incomes in our example, then the net income is below 2 crore, less than 2 crore. If this is the situation, that means total income 320 lakh, total income is exceeding 2 crore rupees only and only because of these special incomes, then the surcharge rate will be 15% on tax on entire income. Surcharge rate will be 15% on tax on each and every income. However, if the net income exceeded 2 crore rupees including these 4 special income, but not because of these 4 special incomes, but because of other normal income itself, that means this normal income itself would have been more than 2 crore. If the normal income was more than 2 crore rupees, then surcharge rate on other normal income would depend upon the amount of other normal income. Other normal income is more than 2 crore but up to 5 crore. Surcharge rate on normal income, tax on normal income, would have been 25%. And if the normal income exceeded 5 crore rupees, then surcharge rate on tax on normal income would be 37%. But tax on 4 special income, surcharge rate will be restricted to 15%. However, our example falls under this particular category A, whereby the normal income is less than 2 crore or up to 2 crore, but because of these special incomes, the net income is exceeding 2 crore. Then in such situation, surcharge rate will be restricted to 15% on tax on entire income. Coming back to the question, while solving, the total tax is 75,30,000. Now we have to calculate surcharge on it. Surcharge rate we can apply separately for all the 3 types of income, 15%, 15%, 15%. Or rather than applying 15% separately on all 3, we can apply, since the surcharge rate is 15% on all the 3 incomes, entire tax 75,30,000 can be subjected to 15% surcharge. How much would that be? 75 lakh 30,000 into 0.15, 11,29,500. Surcharge rate will be 15%, surcharge amount will be 11,29,500. Total will be 11,29,500 plus 75,30,000. Total will be 86,59,500. And now on this 86,59,500 we will apply health and education cess at the rate of 4%. 86,59,500 into 0.04, 3,46,380. 346,380, totaling up to 346,380 plus 86,59,500. 90,05,880. 90,05,880. Let's check whether this is one of the option or not. 90,05,880. Yes, it's a first option, 90,05,880. Let's check what's institute's answer. Our answer is A, 90,05,880. Institute's answer is also A, 90,05,880. With that, this MCQ comes to an end. With that, all the 50 MCQs are over. Now in the next video, upcoming playlist, I will be recording 20 case scenario based MCQs. Each of them will be having 4-5 MCQs. We'll be recording separate video for each case scenario separately.